just proceed, right? We just proceed. Yeah, so Rainer is nodding. Hey, yeah, let's do it. Yeah, let's do it. So let me share with you what's going to happen, right, in the next maybe 20 minutes or so, depending on the detail that Rainer is going to provide. So since we are talking about some form of asset allocation, yeah, and just now we talked about Alibaba, right? Yeah, which is my brother's company, right? So maybe you want to use Alibaba as an illustration, So I'm going to skip the break, So let's jump straight and then into the excitement. But before we go into the Alibaba as a case study, so I think it will be good for me to state up front, right? What is the VIA stand? Yeah. And this is a disclaimer notes. So just pardon me in the next couple of seconds. I'm just going to read this out. So just remember, we're going to share about this Alibaba. And the purpose of the case study, remember, is just to illustrate the application of value investing methodology, as well as various valuation method in the context of real-life companies. And of course, in our situation, right, we are talking in the circumstances of the China clampdown. And remember, it is purely for the continual learning of value investing method, investors' education, and under no circumstances does any information provided in these case studies represent a recommendation to buy, sell, or hold any stocks. Okay, so don't trigger happy, and then press buy, right? Now, the illustrations in the subsequent case study, which is Alibaba, demonstrate the general application of value investing principles or investing principles and do not take into account every single one of the individual characteristic profile or risk appetite of a given investor. So remember, in no event shall VIA, Rainer, like myself, are liable to any viewers, guests, or third party for any damages of any kind arising out of the use of any content shared here, including without limitation the use of such content outside of its intended purpose of investor education, and any investment losses, loss profit, loss opportunity, this is pretty long, special, incidental, indirect, consequential or punitive damages resulting from such unintended use. So remember, neither my company, Mind Kinesis Investments Private Limited, or VIA Value Investing Academy, nor the authors of the case study of Alibaba are operated or affiliated with any broker, dealer, or licensed financial advisor. So remember, past performance is a poor indicator of future performance, which is why nobody can correctly predict short price in the short term, right? So again, the information on this presentation is not intended to be, nor does it constitute investment advice or recommendation. So remember, neither VIA nor Rainer makes any representation or warranty as to the completeness or accuracy of the information in the case study. Thanks for listening to my whole chunk of disclaimer. So right now, I'm going to stop share. You can look at the screen right now, Alibaba Holdings. I'm going to stop share and I'm going to hand over to Rainer. Rainer, thank you. I'm going to stop share right
now. Hello again, everyone. Thank you, Cayden. And so without any further ado, let's just get into this, and I will be explaining and exploring the impact of the regulatory clampdown on our illustration Alibaba Group Holding Limited. So let's begin. So first, let me just give you a brief history about what is Alibaba. So Alibaba was founded in 1999 by 18 people, and one of whom was Jack Ma. He was a former English teacher from China. Alibaba.com was started as a business-to-business portal to connect Chinese manufacturers with international buyers. So today, it is one of the biggest companies in China, providing a range of platforms and services. It is the largest retail commerce business in the world in terms of GMV, which is gross merchandise value. It means the total value of the merchandise sold on a platform during a given period. It is commonly used to evaluate e-commerce companies. Over 50% of the market share in China is owned by Alibaba in terms of GMV. And Alibaba is a dual listed company. It is listed both in the US and Hong Kong. The annual active consumers of Alibaba reached approximately 1.18 billion people for the 12 months ended June 30, 2021. And out of that, 77% are in China, which is represented by 912 million users as shown on the picture on the right. And the remaining 23% are international customers, which is 265 million people as shown on the chart on your right. Alibaba also has a 33% stake in Ant Group, which is the Jack Ma affiliated fintech company, which I was talking about earlier. Ant Group provides digital payment and financial services to consumers and merchants and other businesses. So now let me tell you about the regulatory actions which were taken against Alibaba. A $2.8 billion anti-monopoly fine was imposed on the company, as I've already mentioned in the earlier section. The fine was because Alibaba was forcing its merchants to not advertise its wares on competing platforms. But the fine constituted only a minor portion of its revenue, that is 4% of its 2019 domestic sales. And the company expects that this was a one-time levy and it should not affect the company in the long term. Now, as discussed earlier, the IPO of Ant Group was suspended by the authorities. And after the suspension, the company was subject to government oversight as well. It was required to restructure as a financial holding company so that banking regulations would be applied to it. And I'm sure you remember, as I explained earlier, this was because Ant Group was reaping the benefits of the banking functions without the banking regulations being applied to it, so that was morally wrong. So as a result of all these steps, the Alibaba stock fell significantly and investors were quite nervous, as we all know and we all are. So here are some of the major businesses in Alibaba's ecosystem. I will explain them in the coming slides along with their business segments to which they belong. But basically, Alibaba provides the infrastructure to companies to do business on its platform through the internet. Alibaba does not sell directly, but it is a collection of several platforms. For example, on Alibaba.com, wholesalers can find products from manufacturers. Suppose on Taobao.com, consumers can find products from small individual sellers, and so on. Alibaba mainly derives its income through fees or commissions from its sellers for providing the infrastructure and platform, and through listings, advertisements, marketing, and facilitating transactions and other similar services. Now, let me give you a breakdown of all the business segments in Alibaba's business. So, Alibaba's businesses are comprised of 4 main segments. The first is the core commerce, which contributes 87% to its revenue. So, this is the biggest revenue generating segment for Alibaba. And the next biggest segment is the cloud computing, which contributes 8% to the overall revenue of the company. And then we have digital media and entertainment, which constitutes 4%. And next is innovation and initiatives, which contributes 1% to the total revenue of Alibaba. In addition, we also have Ant Group, in which Alibaba has 33% stake, which provides digital payment services and financial services to customers. Now, I will explain some of the key platforms in the Alibaba ecosystem. So, as explained earlier, core commerce is one of the biggest revenue generating segments for Alibaba. So, it is comprised of China retail commerce and China wholesale commerce. And it is also comprised of cross-border and global retail commerce and wholesale commerce. So, under China retail commerce, first we have Taobao Marketplace, which is a consumer-to-consumer platform, and it allows small businesses and individuals to sell their products on the platform. It has no transaction fees for its merchants. The merchants only have to pay for advertising and marketing to stand out from all the listings which are searched on their website. The next is Tmall. This is a business-to-consumer platform just like eBay and Amazon. This platform is for buying products from brands and retailers. It is targeted at the middle income group of the economy. So, as we discussed earlier, the goals of Alibaba are aligned with the CCP's objectives of focusing on the masses. Alibaba has been constantly innovating new retail formats. So, for example, we have Freshippo, which is also known as Hama in Chinese. It is their self-operated retail chain for fresh produce. and it integrates online and offline operations, and that's why this is called new retail format, because it integrates the online and offline. Then Alibaba has also acquired a controlling stake in Sanat, which is a significant supermarket chain in China. The physical stores of Sanat are integrated with Alibaba, one of the platforms in Alibaba, which is called Taoxinda and Tmall supermarket platforms. This means faster deliveries, larger selections, and more efficiencies in operations. Then under China wholesale commerce, we have 1688.com, which connects wholesale buyers and sellers in the Chinese domestic marketplace. Then we have Ling Xiaotong, which connects FMCG manufacturers and their distributors directly to small retailers in China by digitalization of the small retailers' operations. And this has majorly helped small retailers in remaining relevant in competition to the big box retail. And this is also another field where Alibaba is helping in inclusion of the masses. Then we have cross-border and global retail commerce. So under this we have Lazada, which is the leading and fastest growing e-commerce platform, which primarily focuses on the Southeast Asian market. And then we have AliExpress. It enables global consumers to buy directly from manufacturers and distributors in China and around the world. Then we have Tmall Global, which is for import commerce. It allows overseas brands and retailers to sell to consumers in China, and it is the largest import e-commerce platform in China. Then under cross-border and global wholesale commerce, we have Alibaba.com. Alibaba.com is China's largest international wholesale marketplace platform. The sellers can list their products on this website free of charge up to 50 products. And there are also premium gold memberships which provide unlimited listing of products and verifications from third parties. So also included under core commerce is this segment called consumer services. Under this we have Ele.me, which is a food delivery platform. So Ele.me literally translates in Chinese to "Are you hungry?" Then we have Kubi, which is a leading restaurant and local services guide platform. And then we have Fliggy, which is a leading online travel platform under the Alibaba ecosystem. Next, the next segment that I'm going to talk about is called digital media and entertainment. So under this, first we have Youku. This is the third largest online video platform in China, and it is quite similar to YouTube. Then we have Lingji Games, in which Alibaba develops, operates and distributes mobile games. Then we have Alibaba Pictures, which is Alibaba's internet-driven integrated platform that covers content production, promotion and distribution, and cinema ticketing management and data services for the entertainment industry. So majorly this is for the entertainment industry. And then we have innovation initiatives. So under this we have AMAP. It is a simple one-stop access point for services such as navigation, local services and ride hailing. And then we have DingTalk, which is a digital collaboration workplace. The next segment is logistics. So under logistics, Sinow Network offers domestic and international one-stop logistics services and supply chain management solutions. So the advantages of this is that it provides real-time insights for merchants to better manage their inventory and warehousing. And for consumers, they can track their orders faster. And for courier companies, they can optimize their delivery routes. The next important segment is marketing. So under marketing, we have Alimama, which is a monetizing platform. It matches the marketing demands of merchants, brands and retailers in the ecosystem. And last, we have Alibaba Cloud, which is in cloud computing. So Alibaba Group is China's largest provider of public cloud services. And the cloud computing business offers a complete suite of cloud services For example, database, storage, big data analytics, machine learning, IoT, etc. And Alibaba is a significant leader in this industry. It has approximately 40% market share, and it has first mover advantages in this industry, and this is a major growth potential for the company in the future. So basically, cloud industry is an industry with strong economies of scale and high switching costs. And China's cloud industry is less mature than that of the US, and we already know Amazon is doing pretty well with their cloud business, which is Amazon Web Services. You must have heard about it. It's called AWS. So Alibaba's Ali Cloud is like AWS, and since the market in China is still nascent, it has a huge potential going forward. And Alibaba has been investing significantly to grow scale. The Ali Cloud revenue grew over 50% in 2020. So this is a key area of growth opportunity for the company going forward. And then just a small mention, they also have payment services in Ant Group. So Alibaba has 33% stake in Ant Group, as I have mentioned earlier. And Ant Financial owns Alipay, which is the largest digital wallet in China. So from all this, we can see that Alibaba is more than just an e-commerce company, and it is so crucial for the economic growth of China. So next, I would like to talk about the revenue and performance of the latest quarter of Alibaba, which is June 21. The revenue for this quarter grew 34% year over year, which is as compared to the same quarter last year. And then the net income and the EBITDA has fallen year over year. And this is primarily because the company is investing in strategic areas to capture incremental opportunities, which will increase its addressable markets, and it will help it to better serve customers. The free cash flow of the company has also fallen this quarter, which by 43% year over year. And this was also mainly due to the decrease due to the investment of excess profits in strategic areas, and also because the company utilized some cash to pay a partial fine on the anti-monopoly fine which was imposed on the company, as we have mentioned earlier. Then this slide is comparing the half-year revenues and metrics for the company and of 2021, and it is compared to 2020. So the total column in this table shows the sum of Q1 and Q2 of each year. So we can see that the revenue for the first half year of 2021 has grown by 60% from the same period last year, and the gross profit has increased by 41%. But sadly, the net income, EBIT and EBITDA have fallen this half year, and this is also probably because of the same reasons, that they had to pay fines and they are investing their excess profits in key strategic areas for future growth. So that is a good sign for the company. Then let me talk about the segment-wise growth performance of the company. So as you can see in this red box here, the total commerce division of the company grew by 35% year over year. And this growth was due to the growth of online goods GMV, the consolidation of Sun Art, and strong growth from direct sales, including Tmall Supermarket and Hama. So as you can see in others, this includes the Sun Art acquisition, and the Sinow Logistics has also increased by 50%. So these two are the major contributors to the growth. The Sinow Network Logistics grew by 50% primarily because of increase in order volumes in the international commerce retail businesses. Then we can see in this next red box that the cloud computing sector of Alibaba has grown by 29% year over year. But this growth rate was 59% last quarter. So the reason for this fall is that Alibaba lost a major client last quarter due to regulatory requirements. And going forward, the company has said that they expect more diversification in customers and industries. So that should reduce the concentration risk in this segment of Alibaba's business. The digital media segment grew by 15% year on year. And this was because of better content, improved quality of content in Ali Pictures and Youku. That's it. And so now let me talk about the pros, some of the good points that work in favor of Alibaba. The CCP's vision to redistribute wealth to the masses should boost the purchasing power of the people in the long run, and that should boost the revenues of Alibaba. The Chinese e-commerce landscape is thriving. Alibaba will benefit from the growth of China's consumption economy, which is benefited from the acceleration of digitalization in all aspects of life and work. And mostly the business fundamentals of the company seem to be largely intact because the fine which was levied, all these were not related to the fundamentals of the company. And growing digitalization will also lead to growth in cloud business, which is a very good growth potential for the company going forward. The company plans to invest all of its incremental profits back into business. It wants to put money into strategic areas, for example, Taobao deals, which is targeted at price-conscious consumers, and new retail, which will merge the online and offline shopping experiences. So you see here again, they are targeting the masses, so their goals are aligned with that of the CCP. The company, so these steps should expand Alibaba's customer base into China's lower tier cities, less affluent shoppers, and it should drive engagement and frequency also, and ultimately the share of wallet of Alibaba should increase. Some of the further positive points for Alibaba are that it is already well positioned in the e-commerce space, and boosted by the reinvestment in business expansions, the GMV of the company should grow meaningfully, subject to the uncertain political and regulatory environment. That is always a disclaimer. And recently, Alibaba launched its first NFT marketplace platform that lets musicians and artists sell the rights to their content via blockchain with the approval of the Sichuan government. So this means that they are innovating new ways to make money and expand. Here is a short excerpt from the latest earnings call for Alibaba. So let me just read it out. I will read out the highlighted portion. All the businesses we have invested are showing rapid growth. In the coming quarters, we will continue to invest additional capital into programs that support our merchants and developing new businesses in strategic growth areas that will help us increase consumer wallet share and penetrate into new addressable markets. Our strong profit and cash flow generation capability gives us the internal resources to focus on long-term value creation. Also, we are increasing our share repurchase program from $10 billion to $15 billion. This is the largest share repurchase program in the company's history because we are confident of our long-term growth prospects. So as you can see, this shows that they are investing for the long-term growth of the company and they are buying back shares. So this demonstrates the management's confidence also in the company's long-term value creation. Now I would like to discuss about some key risks that Alibaba faces. Alibaba has pledged to end the anti-competitive practices in its company, so it may have to make certain investments or changes on its platform to keep its merchants satisfied. And this could hurt profitability in the short term. However, as far as I see, all the players would have to make similar changes. And since many merchants are already on multiple platforms, but they are attracted to Alibaba because of its strong network effects, its traffic, because of its dominant marketing effectiveness, so this should have limited impact on the company going forward. Another risk is that they are facing increasing competition from companies such as JD.com, Pinduoduo, Tencent, and many others. One of the key risks for the cloud business is that the new regulatory regime for edtech companies will possibly curb their spending on internet services. This should affect the cloud business a little bit. And they have also lost a major client last quarter. However, the company hopes to diversify and grow the cloud business so that the concentration risk is minimized. Now, this is a very important point, the risks of investing in a VIE. I don't know how many of you know that if you invest in the US listed Baba stock, then you are investing in a variable interest entity. Now, what is a VIE? So, when you invest in a VIE, that is, if you invest in the Baba stock, you are not getting any actual ownership into the real company. Now, let me explain how this works. Most Chinese companies are not allowed to have any foreign ownership. So, to circumvent this law, if a Chinese company wants to get listed outside of China, it does so through a VIE. And under this structure, the company creates a shell company in the Cayman Islands, which is also named, let's say for our example, Alibaba. Then, complex agreements are made to give this new company a claim to profits and control of assets in the old real company. There is no actual ownership, there is just an agreement. Then the new company is listed in the New York Stock Exchange. The VIE structure is actually illegal, but hundreds of Chinese companies have been listed like this for decades. And the Chinese government conveniently turns a blind eye because even it wants foreign capital to enter. So with the unpredictability of the regulators in China, they may one day decide to enforce the laws. And then the shareholders of the US listed VIE may be left with nothing. Now, I'm not saying that it is very much likely to happen, but it is a very real risk and investors should be aware of this. And as evidenced by the recent crackdown, the political volatility of China is a key risk. And similarly, there may be uncertainties regarding the interpretation and enforcement of PRC laws and regulations, which we should keep in mind. Now, let's move on to the valuation. Most VIA graduates would be familiar with this model. Using the VIA target price calculator for Alibaba, we enter the past and present EPS here. So, we enter the past EPS here and the present here. And so, we can see that the company has grown by 46% in 10 years. Assuming that the company grows for 10 years at a discount rate of 10% and an inflation rate of 2%, with a 30% margin of safety, we get an adjusted growth rate of 18% for the target buy price to be 1097 CNY, which translates to $169. Investment in this stock is justified only if one has the conviction that this company can grow at 18% per annum or more. Now, please note that all investors should generally refer to additional valuations as a prudent step to take in the value investing methodology. Now, I have used two other valuation methods, taking conservative assumptions and 30% margin of safety. The first method is the perpetuity growth method. It is based on the free cash flow projections of the next 5 years. And the intrinsic value comes to the range of 172 to 198 as we can see, and the current market price is 173. The second method is the EBITDA multiple method. This method, according to this method, our range comes to 192 to 223 US dollars. But as always, please note that all investors should generally refer to additional valuations as a prudent step to take in the value investing methodology. So to sum up, I would like to close with some concluding thoughts. Alibaba dominates the e-commerce as well as the cloud computing space in China. It is in the growth mode with its focus on reinvesting profits into strategic areas. Moreover, the share repurchase program also shows management confidence. The one-time fine had a short-term impact on the company, and Alibaba is now going to stay within regulatory boundaries. As long as the company's goals are aligned with that of the CCP and broad social objectives about uplifting the social and economic class of the masses, it should sustain its long-term growth trajectory. Companies like Alibaba are crucial for the overall economic growth of China, and possibly the authorities would not want to cripple such a company permanently. With that, I would like to thank you all for your interest and attention this evening. Now, I would hand over to Cayden to continue with this presentation. Thank you.
Okay, hi, Cayden is back. If you look at some of the valuation that Reina has used, of course, if you look at the slide right now, the very first one is our discounted cash flow, which is earning based. Yeah, so the intrinsic value goes up to 169, which is over here. Yeah, after conversion of the ringgit 1097 right to US dollars. So that's the first valuation method. And of course, the second one that Reina used is the perpetuity growth method. She used assumption of 5 years. It's a bit complex, so we will not go into the nitty-gritty, but this is based on free cash flow. So I can really see one comment, Dennis. Dennis like all this technical stuff. Yeah, so he said that cool valuation methods mentioned. Never tried this before. Thanks for sharing. I'm quite sure that in Dennis' future US case study, right, he will go and try this out. Then, of course, we have the EBITDA multiple method. Now, putting all the nitty-gritty aside, at least you have some range. So maybe I can leave this thing here. If you want, you can take a screenshot, right, of this in the next 5 seconds, right? Yeah, oh, by the way, the YouTube video will be here. We're going to leave on this URL, right, permanently. You can always come back, look through the slides, take some screenshot or whatsoever, So we have one, right, which is 169. And then, so I think the range goes from 169, which is the lowest, right, to 223, which is the highest. Okay, 169 to 223, right? So again, like what Reina is saying, every investor like you and me should generally refer to more valuation method as a prudent step to take into account the value investing methodology. And she has really shared her concluding thoughts, right? So mine is pretty fast, it's just 1 or 2 slides. Now, so the key thing is, in case some of you very cheeky, right, you may message me and say, okay, then did you press buy for Alibaba? Okay, so I think I better don't share about me because just now I already said I'm not a licensed, right, by MS. But let's talk about other people. So now the question is, who owns Alibaba? I think if you see Charlie Munger owning Alibaba, perhaps you have higher confidence, right, than hearing Cayden owning Alibaba. So let's look at here. If you look at Charlie Munger's 100% portfolio, right, 17.59% is Alibaba, okay? And if you look at here, when did he bought Alibaba? He bought it in the first quarter as a new buy. Remember, it's not addition, it's a new buy, right? So the moment he pressed buy, right, where the average share price is 245, right now it's at 166. I mean, as of a couple of days ago, and the price drop has been about 32%. Yeah, so as value investor, we have to ask ourselves, our time horizon has to be extremely long. Yeah, so right now this is like a knee-jerk effect. So Charlie Munger, again, is a famous value investor, the vice president of Berkshire Hathaway. So he owns Alibaba. So that's one famous value investor. So let's look at the second one. The second famous value investor, right, is Monish Pabrai. Monish Pabrai. If you look at his Alibaba stock, right, his top holding is 21%. It's almost the same, right? This is about 18 and this is about 20. So when did he start buying Alibaba? So he bought Alibaba in the first quarter, and then he bought it in the second quarter. Yeah, so that takes up about 20%. And then right now this is negative, negative, right? So how should I say? I mean, if some of you are owning Alibaba and then you look at these two fellas, Charlie Munger and Monish Pabrai, right? So I'm not very sure, do they give you some form of consolation? Yeah, so when your price drop is 20-30%, Charlie Munger is going through the same thing. So if they're not panicking, maybe why should you, right? Yeah, but provided you know what you're doing. Yeah, which brings me to my last slide. Actually, I'm nothing more. And when I look at the time, it's just nice. We started at about 7:30. We finished at 8:35. Oh, there's so much information, and we actually are ahead of time. So 1 hour and 5 minutes, we actually finished this presentation, which is fantastic, right? So I'm going to end my my presentation as well as Reina's presentation with a very simple slide. Now, just to let you know that this is a screenshot of our channel called Value Investing Academy. And the URL, right, is youtube.com/Value Investing Academy. So you realize that our subscribers is very small. It's about 2,000 plus. You know, some people, they are like 300K and then 1 million and so on, right? Oh, so Manfred say, I bought cheaper than them. So you feel better, huh? So Manfred, does your ego get boosted? You bought cheaper than them. So you make that comment, you feel better, right? Okay, but joke aside, yep, so this is our YouTube channel, which is youtube.com/Value Investing Academy. Now, just to let you know that if any one of you find that our presentation is interesting, right? Because we, maybe let me start off with our original intention. Our original intention of doing this, right, for the very first time is to talk about the latest hot topic or current issue that affect investors. And of course, of all the many issues, we have selected the China clampdown on edutech companies. Yeah, so we thought this was interesting. Yeah, then of course the next question is, if this is interesting, how should we do it? And at first we were thinking doing Facebook Live, but we had done it before. Then we were thinking we're doing on Zoom. We're doing on Zoom, nobody knows. So eventually we want to try out something new. So eventually we ended up using YouTube. So these are very first time, right? So thanks for being patient with us. By the way, if any of our grads, right, you find that this topic, I mean, you find it interesting that we are going to talk about the hot topics, the current issues that are facing retail investors. And if you would like us, right, to do it on a regular basis, regular, we haven't figured out the schedule, so I better don't make a promise first. But if you would like us to do some research on your behalf, at least to kickstart, right, so that you know what is happening around the world that will affect us as investors. If you really find that this topic is interesting, right? If you don't mind, can you just help us write, just write the word more, not write. Can you just type in a comment more, right? That means you wanted more, lah. You wanted more, huh? If you want us to do more interesting topic in our next session, right, in which we will figure out when that will be, in the YouTube comment section, can you just help to type more so that we know people are interested, lah? If nobody's interested, nobody type, but then we don't do it. So faster type. Great presentation, VIA, always something new to learn. Good, huh? Ali, next time we ask you to come and present, okay? We ask you to do Sheng Xiao or something like that. Okay, faster, quickly type. Oh, thank you. Yeah, Diraj. Diraj is watching this at Switzerland, you know. You know, Singapore is supposed to have a Switzerland lifestyle, right? But only one person has Switzerland lifestyle, which is Diraj. Because as of today, the Singaporeans are having a Singaporean lifestyle, not Switzerland lifestyle. Wow, Ali say more. Oh, very good. Maybe there's a time lapse. Time lapse. Lag, right? Wow, so I see like maybe 20 more. Okay, very good. So continue to type more, and then do us a very small favor. Two things, right? Number one, at this YouTube video, there should be a like button. Correct, huh? There should be a like. Don't mind, right? Before you leave, and then go for your, wow, so many more. Okay, can you please help us to press like, huh? Press like, so this first thing, don't mind, right? Help us to do, lah. Yeah. And then the second thing is there is a subscribe button, right? If you don't mind, just click on the subscribe button. Okay, so just click on like, help us click on the subscribe button. And before encore, yeah, I should ask you to type encore, huh? Why so lame, right? I put more, right? Yeah, encore. So before we end our session, I would like to thank Reina. And because Reina has spent really quite a number of days doing research on this topic, right, which is quite refreshing versus the usual case study that we do. So I'd like to thank Reina. Reina is just sitting on my left side. And I would also like to thank Irfan, right? Irfan quite poor thing. Irfan one-man show. One-man show. Irfan is a DJ. He's trying to make, do it the button. And then he's the DJ, he's the videographer, because every time when I speak and Rina speak, he has to toss the camera from left to right, right to left, and then he would adjust this and do that. Yeah, so I'd like to thank Irfan, and all this will not be possible without Reina and Irfan. Of course, lastly, I would like to thank all of our graduates, which is 191 of you. Okay, good. So you like already, huh? Like already, huh? Okay, thanks for... Desmond say, what's Swiss lifestyle? You must ask Diraj. Diraj is in Switzerland, we're all in Singapore. Okay, so I'm going to head off now, right? Head off now. So stay safe. Me, myself, of course, together with Reina and Irfan, we'll think of more things, and if we have some exciting topic, we're going to go through this process again. Okay? So thank you all. Have a good evening, sweet dreams, and goodbye. See you soon. Goodbye. Thank you.